Okay, everybody, it is me, Gregory Mannarino, on a freak show day. Just absolutely out of control. We have a lot to talk about. Post-market wrap-up, Thursday, August 19th, 2021. I'm talking about a roller coaster ride in this market. Dow at one point was down 270 points, went positive, went back down 270 points, finished with a fractional loss, with the S&P 500 going green and the Nasdaq going green. No surprise. I told all of you this morning that the fear trade was on. A lot of buying every time the market dropped. We're going to need to watch this, people. A lot of this is the dollar strength right now. Another, I would say, a substantial knee-jerk higher with the dollar and crude oil, which is getting hit. We're going to see. We're going to see what happens with crude. Look, crude has gone parabolic. Okay, we hit like 72 or so, or 74. Came down, went back, and now we're going back down again. I think, honestly, that it's just a matter of time before crude establishes a new floor and goes much higher, much higher. Again, crude oil is priced in dollars, as are, well, theoretically, other commodities like gold and silver derivatives. And when the dollar gets stronger like this, well, of course, you're going to see these things fall under pressure. I think you all understand that. I mean, but look, we're not even going to go there with regard to, actually, maybe we will go there. The off the Richter scale, manipulation in the commodities market altogether. Crude oil has no business being here. You all know that. None whatsoever. Okay, it should be around, I don't know, $17 a barrel. And with regard to gold and silver, I mean, we know what's going on. We know exactly who's doing it. And look, let them play their game. We're going to play ours. I've been telling you this for the longest time, okay? When you're holding physical gold and physical silver, you're not trading these things. You understand that right now, clearly, the environment remains risk on. Meaning, okay, stocks keep going up. Sure, we had a drop in the market last couple of days, but we just hit a record high on Monday. I mean, people, you can't make this stuff up. So, stop panicking. It's so funny. When the market goes up, 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 everyone is, doesn't say a word. When the market seems to go down just for a couple of days, you have no idea the panic that people write to me. They just can't get a grip. And these are, again, people maybe who are in this market playing with money they can't afford to lose, or scared money. Get out. You can't do that. If you're playing with scared money you can't afford to lose, or you're afraid, you're going to make bad decisions and you're going to get all upset. Start investing in other things, not this market, which can be volatile and from time to time can fall under some pressure. But this is nothing. I can only imagine if we got a real correction what people would do. Maybe jump off a bridge. I mean, I have no idea. But people get really panicky about this. People, just keep your eye on a couple of things, and you know what they are. That 10-year yield is key. It's not doing too much. Yes, it did come down. It came up a little bit today. A lot of buying every time the stock market hit its low. We'll see. Expect some volatility here. That's how things work in this market. It doesn't always go straight up. Okay, and you got to look at other factors. The dollar. You got to look at crude oil. The Fed's balance sheet continues to balloon. And we got a couple of interesting warnings today I want to talk about, but let's stick to the market just a little bit further. So like I said, crude oil fell under pressure. Gold and silver fell under pressure. Cryptocurrencies are taking off. Have a look at Dash, people. I told all of you. I'm telling you what's going on here. I happen to know that at least one big Wall Street bank is buying this stuff. Henceforth, why I recommended buying it at the time. And I think Dash and the other cryptos are going much, much higher too. All right. Anyway, that's a little bit of maybe inside information for you. Do what you want with it. Anyway, so let's talk further. This is Goldman Sachs. Okay, Goldman Sachs is warning of a coming quote, inflation surge, an inflation surge, and also slashes its GDP estimate, because we understand just yesterday, what did they say, Goldman Sachs? The economy is, quote, not good. And that was followed up by Citigroup. So according to Goldman Sachs, you can expect this I mean, we just got this report this morning, which said, well, they're allowing us to know that inflation is going higher at a faster pace than they predicted. You know, the economists, they're so smart, these economists. Anyway, so Goldman is saying, prepare for a coming inflation surge. That's their words, not mine. Okay, now Citigroup warns again. This is their third warning. This is what they're saying. Quote, are you ready? This is not my words. This is their words. Something will give in the United States stock market. So it sounds to me like Citigroup here is saying, hey, get ready for some type of a market event to occur that's not going to be too good. Okay, well, let's see. This is their third warning. Just so far, the last two, we hit record high. I sincerely do not believe the Fed is going to stop what they're doing, okay? And it's not just the Fed. It's central banks around the world, including the IMF. They're issuing more debt. It's not going to stop. Debt is the fuel behind the markets. Period. That's it. Until that mechanism stops, market's going higher. Market is going higher. Period. I can't say this another way. Now, here's something else that is not a surprise. They're pointing towards, again, and this is the same narrative over and over and over again. So it's supply chain disruptions that are responsible for the surging inflation. It's not the Federal Reserve. You can't make that up either. Try to make something like that up, all right? Again, it's a distraction. Don't look here, look over here. It's always the same. You cannot be allowed to know the truth, people. And I think you are well aware of this. There's something going on here that is so twisted, so dark, so ugly, so hideous. But again, I think you and me, we're on the right side of this. I think we have the right perspective, understanding the drivers here. The stock market is nothing but a derivative of other things. In other words, the stock market itself is deriving value, well, really from exploding debt, number one, suppressed rates for now, since the meltdown of 2008, it's not going to stop. Not going to stop. The Fed's going to continue to buy it all in their effort to become the lender and buyer of last resort. You all know that. And we all understand the rigging, the manipulation. The market is not real. There's nothing here that's real anymore. It's completely detached from reality. And, the disgusting vomitous, seriously, mainstream news outlets are really trying to, it's not really, maybe it is the commentators' fault because they're going along with the charade. Honestly, they know better. They really do. And they're getting fed some kind of a thing to just read off, trying to tell you that, the economy is strong and we're doing so great. Really? Really? But again, that's the narrative, and you should not pay a damn bit of attention to it because it's just all fake. It's all fake. Anyway, in summary here, real quick, an extremely volatile day in this market. S&P finished in the green, NASDAQ finished in the green, fractional loss with regard to the Dow. They're buying the dips, just like I've been telling people to do. Keep your eye on that 10-year yield. It's the key. It's the single biggest key to this market, people. You all know that, and you could watch all this stuff and track it right on my website. It's all there for you, okay? Everything you want to know about the market without having to search for it, it's right here on my website, traderschoice.net. The second page has everything you want to look at. Charts and graphs and free downloads and a chat room and the dollar index, crude oil, the 10-year yield. It's all there. You don't have to, walk around and not know where to look if you want to capitalize on this market. So look, what are we going to do? What we're going to do is sail through this. Okay, sure. We got a warning today about something's going to give in the market from Citigroup. Okay, well, we'll wait for that to happen. Until that point, I'm buying the dips like everybody else who knows what's going on here. And with regard to Goldman, this is an interesting. Warns of this coming inflation surge and slashes GDP estimate moving forward. Let me know what you think about the stuff I covered here. Honestly, I will read the comments, I promise. And I'll keep you on top of it. There's just no doubt about it. All right, I'm out of here. Love you a lot. I will see all of you in the morning. It's going to be just fabulous.